2024, and I am still getting this question all the time on consultations, which is if I don't cash out or if I don't convert my cryptocurrency to fiat, do I still need to report on my taxes? The answer is definitely yes. Even if you don't cash out, if you have any trades from one cryptocurrency to another, that is a taxable event. Even if it is not through a centralized exchange, even if it is on a wallet, even if it is on a foreign exchange, in any of these scenarios, you still have taxable events. That's because long ago, back in 2014, the IRS issued guidance and said that cryptocurrency is to be taxed as property, which means that on any sale, exchange, disposition, or spend, or any conversion overall, you have a sale. It's a taxable event. And the gain or loss is determined based on the original price you had purchased it and the sales price or the value that you're converting it into. And so if you're going from Bitcoin to Ethereum, you have to actually calculate the gain or loss based on the value of Bitcoin or Ethereum when you sell it. So even though you haven't gone to cash or fiat, in many ways it's considered just the same as if you had sold that first cryptocurrency for fiat or cash and then use that cash to buy the second token. And so even if no cash on the table, no cash in your hands, you may still have a tax due, but you do have a reporting requirement for each of these transactions. And that's the same also with spends. If you're purchasing something, you're paying someone for a service, you're buying a cup of coffee from Starbucks with cryptocurrency. In any of these events, you have to report on your taxes. But even in that case too, you may have a gain or loss, and those gain or losses need to be reported on your taxes. Not only is that true of trades in general, but even if you have a loss, and that's something that I'm also asked all the time, or I'm told, hey, Andrew, I didn't have any gains, I only had losses on my taxes, so I didn't report, or I don't have to report because I had losses. In fact, that's not true. The IRS requires reporting for all of these types of transactions, despite you having a gain or a loss. But there are several reasons that you want to report if you have a loss. The first is that losses are very beneficial. They can be used to offset other gains from crypto, gains from sales of stocks, gains from sale of a property. So capital gains and losses from all different types can be netted against one another. And so if you have losses from crypto and gains perhaps from your stocks, you'll want to use those losses and reduce your taxes by reducing those gains. But also you're required to report. You have to report these on your taxes. And if you don't report, the IRS doesn't know that you have a loss. And so when people say to me, hey, I've got a loss, and they're often quite confident, in many cases, they don't actually know. The records haven't been reviewed, accounting hasn't been done to determine, are there actually gains or losses on each of these transactions? But once that's done, then it's reported on your tax return. And it's actually reported in a lot of detail on Form 8949. And that goes to Schedule D, which you might hear about because it's the same form for stocks or other securities. And so on 8949, you have to identify the date you acquired it, the price you had originally bought it for, the date it was sold, and the sales price, as well as any gain or loss. And this way, the IRS can be informed or know that it's actually a loss. Otherwise, the IRS may think you just have a sale and it's a gain. People will often say to me, hey, well, if the IRS wants to audit me and go through the records, they'll see that I have a loss. But the IRS doesn't do that in an audit. The burden is on the taxpayer to support their cost basis or what they purchased it for. And so in many cases, we see audits or IRS notices based on just the sales price or the proceeds without any cost basis at all. And if you're only considering the sales price, then of course you've got a gain. You have a gain in all situations, and you're greatly overstating your tax. One way to avoid IRS issues, audits, further scrutiny is to report as thoroughly as possible, even in the case of a loss. And so we've seen over time that if you report, your chances of audit are greatly reduced. In fact, the IRS is very aggressive against crypto in general. But if you're not reporting at all, or you're not reporting all of your transactions, it's a much easier audit for the IRS, a much more difficult audit for the taxpayer than if they're reported. And from what we've seen, if you report in general, you're not the type of person that will be chosen for an audit. Sometimes it does happen, but statistically, we've seen that more people are getting audited that don't report at all than those that are doing their best, reporting as many transactions as they can. So my advice to those watching, and this is not legal advice, have a consultation with us if you do want any formal advice. It often makes sense to report everything, report as fully as possible, even if that means amending prior year's tax returns. So often we have clients or consultations with people that say, hey, I've got several years of crypto activity that I haven't reported or reported fully. And believe it or not, rather than just avoiding the situation or hoping that in the future the IRS won't find you or will just issue you a bill for an amount that you agree with, it's much better to be proactive and to amend your tax returns, report properly, pay any tax due, and move on from there. If you're watching this and you think that someone might benefit and perhaps has not reported crypto on their tax returns, please share it with them. Thank you.